This is Agriculture Today, and I'm Shelby Varner with the K-State Radio Network. Today's show kicks off with K-State's Guy Allen and Daniel O'Brien as they discuss their 2026 grain outlook. In the first segment, they chat about export expectations, the U.S. dollar, and transportation. Guy and Daniel continue their second segment, looking into other countries, conflict, and the Monroe Doctrine and tariffs, and how they all have an impact on the grain market. K-State meteorologist Chip Redmond ends the show, highlighting his favorite ways to track and look into expected weather, and also what to avoid. That and more is coming up ahead. You're tuned in to Agriculture Today, and we start our Friday show discussing U.S. grain export outlook for 2026 with the senior economist at the IGP Institute, Guy Allen, and K-State grain economist Daniel O'Brien. Guy, Daniel, thank you both so much for taking the time to join us today.
Good to be here today.
Yeah, thanks, Shelby.
Guy, what are your expectations for exports?
Well, we want to take a bit of a deep dive today on sort of what Dan and I see for the export market going forward in 2026. It's a pretty foggy crystal ball, but pretty dynamic. Look, U.S. grain exports are being characterized by record-setting corn volumes and recovering wheat shipments. And this is sort of very much contrasted by volatility and shifts in the soybean market, where our soybean exports are less than stellar and very, very frustrated with our China relationship. So it's sort of a tale of two cities there that we're looking at the moment. I mean, overall, USDA sort of has us projected to reach $72 billion of exports in fiscal year 2026. Drilling down a bit, we'll start off with corn. Early 25-26 marketing year has corn exports going at a gangbuster pace, sort of on schedule to have another record export year. We did have a record export year last year, so looking to potential do that again with the big crop that we had here. We're forecasted to reach 80 million metric tons or 3.2 billion bushels of corn exports. That's increased by 125 million bushels compared to last year. And we've started off the first 3 months there of 25-26 at that record pace, having a number of weeks of record volume of inspections as well as sales on that. So that's very, very good outlook that we're seeing on that. Shifting to soybeans, different world there. We've got volatility, we've got uncertainty. A lot of this comes down to U.S. relationship with China. Keep in mind, China imports 2/3 of the world's oilseeds. Numbers at the moment, we think we're going to struggle to meet the 44.5 million metric tons and have lower exports coming in. That said, this week, if you look at export sales, China's been there every day purchasing some fairly significant volumes of soybeans. So it looks like they are coming to the table finally as Brazil is running out of their exportable surplus down there. And then with wheat has been, I guess, quite surprising. We didn't expect wheat exports to be quite so large with record world production and very large stocks located around the world. But we're maintaining a very optimistic pace so far this year on wheat. So that's keeping prices of wheat firmer than maybe what we had expected.
As we look at the news over the weekend, we hear of I wouldn't say renewed, I'd say re-intensified conflict between Russia and Ukraine. Of course, this is happening at the same time. We've just been having ongoing negotiations. It did sound like over the weekend that Russia had attacked grains export facilities in Odessa and another important terminal. So that's interesting. I would say also just quickly for U.S. wheat overall, we're about we're 29 weeks through the marketing year, about 56% of the way there, and have bought ahead about 81% of the crop. So that's interesting. Maybe the best cure for low prices, guys, low prices. Hard red winter wheat's been the quantity leader in terms of classes. Most of the times when the USDA makes a wheat export projection, they kind of trail the actual shipments. Well, in this case for hard red, we've actually shipped about 61%, about just under 200 million bushels of U.S. hard red winter wheat, aiming for 325 USDA had projected. So we're about 60% of the way there. And actual shipments and forward sales are both altogether about 81% of the way there. It's 55% of the way to the USDA's goal. So interesting. And we've also bought ahead decently, about 16 weeks of the U.S. soybean marketing year done, about 31% of the year complete. We're about 58% of the way bought ahead. And as we look at the futures, we're kind of struggling, especially as over the holiday period, low volume sales, et cetera. But yet we do have some activity happening. I think Guy just would say that we have a lot of grain in storage, and it'll be interesting to see if we get the type of sell signals from U.S. farmers into export channels all that much more, and can avoid just having a lot of corn, sorghum, wheat, and soybeans all just pile up out into spring and then be forced to sell at a rougher time.
Let's drill down in some of those issues surrounding that if we could. Might start off looking at the U.S. dollar. U.S. dollar earlier this week reached the lowest level it's been since early October, and that's lending a bit of support to both buying interest as well as hopefully the prices here, as we see some of that buying coming into the marketplace. It dropped down below 98 on the U.S. dollar index. Here just today, it was trading about 98.2. So a little bit firmer this week, but still fairly cheap values. And as that dollar stays lower, that'll continue to lend a bit of support to buying interest into U.S. commodities on that. Some key things we're going to watch going through 2006 on the dollar. Look at those Federal Reserve rates. We expect the Federal Reserve to continue to lower interest rates, particularly the first half of 2026. We're going to continue to watch inflation and growth numbers. I particularly like to watch that M2 money supply number. It's been expanding a bit more rapid than what we like. Also driving that's going to be global economic and growth factors, as that's really going to drive a lot of our export demand interest on that. And then second half today, we'll talk about a lot of geopolitical uncertainty here towards the end of the program. Dan, you want to add anything on the currency situation before we move to transportation?
Just that here we received a report within the last several weeks of about 4% GDP growth over the last quarter or so. Normally, I'd say that's a great thing, but what does that portend? If you have good growth like that, that raises the fears of some with regard to inflation down the road. So, Guy, that's a game played at Federal Reserve offices across the country and in Washington, D.C., and we'll just have to see what the players do at the Federal Reserve and wherever.
Moving on to the transportation sector, starting off with dry bulk freight. That's the cost of moving our transportation of our goods from the Gulf or the PNW to our export customers. Dry bulk in 2026 is looking to be fairly balanced and stable, but maybe a little stronger there. The key driver on that's going to be, again, the demand for coal and iron ore. And underlying that is going to be particularly the economic situation that we see in China. If we see some economic recovery there, as well as in Korea and Japan, we should see maybe that lend a bit of strength to the dry bulk ocean freight values. Just moving on to more domestic transportation. Currently, we're watching that lower Mississippi River. We've got some low water situations down there. In contrast, last year we had high water, and 3 years ago we had another low water situation. But when we get that low water situation, that increases our barge freight rates, as we don't have that same capacity as they have restricted drafts south of Cairo or even south of St. Louis. So not only do we get higher barge rates, that also reflects in the higher premiums we're paying for our per car railway rates. And what that impacts is we've got weaker basis values on the interior of the U.S. So and I think we're seeing that in some of our nearby basis numbers, particularly. And we sort of expect those basis values to improve as we move into the marketing year. Dan, what are you seeing in that?
When you look at the Ag Marketing Service, Ag Transportation Report, you see week after week now lower barge quantity movement and higher rail movement. And I think that ties in with the water situation that you're talking about.
It also helps a bit of demand coming off the PNW, where 6 months ago we had demand off the PNW was really, really weak. The other thing with those higher transportation costs, it's going to increase the cost of our fertilizer and our northbound products, ag supply coming in for this spring. And it's another one of those pressures reducing farm profitability as we look at planting coming up in a few months. Another topic there on the rail situation, we're watching pretty closely the Union Pacific and Norfolk Southern merger talks. They put an application into the Surface Transportation Board here in December. That period is now open for comment. The BN, Burlington Northern Santa Fe, is particularly pushing back on that merger quite a bit. That'll actually create the U.S. first transcontinental railroad, which is following a couple of years ago, we saw the merger of the KCS and the Canadian National, and that gave us very much a transcontinental railroad with that Canadian-based railroad.
And Guy, if I can add in, I've heard it's probably somewhere a room full of economists are sitting there being skeptical about yes, even though it's hooked together, can they go from the regulations that impact one part of the country to another part to the next?
Look, I think we're gaining fairly significant efficiencies through those mergers, but it does concentrate market power on that. I think the role of that Surface Transportation Board and watching making sure that competitive tension continues to exist, particularly in some key parts of the country. West Texas is always a good example where the railroad doesn't have to compete against the river there, and rail rates can be a bit higher there than they are elsewhere in the country.
That was K-State's Guy Allen and Daniel O'Brien. We're cutting to a short break now, but when we come back, we'll once again be joined by Guy and Daniel. You're tuned back into Agriculture Today, and we continue our discussion on U.S. grain export outlook for 2026 with the senior economist at the IGP Institute, Guy Allen, and K-State grain economist, Daniel O'Brien. Guy, as we continue talking about expectations for exports in 2026, it's important to mention China, and what are you seeing as we look into this year?
Well, when we talk about China, there's a number of geopolitical issues that always come to the forefront, but it's important in global trade because it provides quite a bit of context. And the first one is China's rise as both an economic and military power. That's focused around Taiwan and South China Sea specifically. And those tensions at the moment have seemed, I thought they were sort of settling down a bit, but they seem to raise their head here in the last week or so. Underlying that is their Belts and Roads Initiative, which is their global infrastructure development strategy that they initiated in 2013 to basically secure their supply chains. Now, China is the biggest importing economy in the world, as they're the global manufacturer there, importing a lot of inputs so they can produce those outputs. And they've invested more in 150 countries and other international organizations. So we continue to watch that quite closely. The other key thing is we had that trade truce with China a few months ago. That expires the second half of 2026. So I'm sure first half of 2026, they're going to be revisiting that. And depending on how those talks progress is going to make a big difference on how the second half of the year and next year we proceed in our trade relationships with China.
In 2025, we had the contention over the Panama Canal, and which had a lot to do with your area of expertise with grain trade transportation. And of course now the U.S. is involved with Venezuela, and you're getting into countries in South America where China has also been involved in investments of ports and whatever. So here we're talking mainly about the grain markets. Well, that to the degree that these contentions interrupt flows of U.S. grain and other goods around the world, that's a big issue to consider. What do you think on that, Guy?
Yeah, that's exactly right. I want to go talk about the Monroe Doctrine and Trump's corollary on the Monroe Doctrine here in a bit. But China's presence as well as Russia His presence there, particularly in Latin America, is an increasing concern. Before we go there, we might move to talk about Canada and Mexico. That USMCA trade agreement's supposed to be revisited in 2026. So that's moving up the agenda there for the Trump administration. Look, since that was put in, we've had quite robust and very good trade relationships with both Mexico and Canada. They are our 1 and 2 trading partners, making up over $2 trillion of trade with the U.S. But here it's under mandated review here in 2026. A lot of that discussion is going to focus around supply chain issues, digital trade, labor relations, potential and existing tariffs, which have been causing quite a bit of tension. The automotive sector is going to be key on that, as well as the IT sector as well as energy imports from Canada. And you look, basically, I think if the U.S. can put together Canada, Mexico, and the U.S. in a very strong, tight trade relationship, that's going to be good for everyone. We just need to adjust that since the NAFTA came about in 1995, as all three of those countries have evolved and changed their economic situation quite significantly.
To support what you're saying, Guy, we talk about strong corn exports and even quietly rebuilding sorghum export pace here of late, and a fair amount of that's going down to Mexico. That movement to the south by rail to I think largely through Eagle Pass, Texas, places like that. I guess gives us focused spotlight on U.S.-Mexico relations as well as Canadian movements. By the way, you were up into Canada within the last week or so. Interesting. Before we came on here, I was quizzing you about what you were hearing of people there, but you were in the Ontario area, not out into the more volatile plains parts of Canada. Any comments on U.S.-Canadian relations from up there?
Yeah, look, it's a very dynamic, changing situation, and there's talks in Alberta and Saskatchewan, which are pretty strong about seceding from Canada. That follows Quebec's efforts in the 90s and early 2000s, where they basically set the platform for that. Look, underlying all that is basically we'd like to have a seamless trade relationship with Canada, particularly. They're a good neighbor, easy to work with, a lot of similarities between the two countries, and just setting up a situation on both sides that facilitates that trade. And a lot of people sort of forget that Canada does have some very prohibitive trade tariffs that have been there for a long time on milk and a number of other products going back into Canada. And if they sort of level the playing field there. The other underlying issue there is their contribution to the NATO and their military contribution, which is, I think, they're the last country or the least contributing country of NATO on that. And I think if that changed a bit, that would sure help those trade relationships.
Guy, you made a mention of the Monroe Doctrine. Do you mind breaking it down and explaining more on that?
Yeah, you have to go back in history, early 1800s, when President Monroe basically set a policy that we're going to keep European powers out of the Western Hemisphere. And that's come up a number of times throughout history. What we're looking at now is what's being referred to as the Trump corollary of the Monroe Doctrine. And most specifically, or most currently, when we're having a look at the Venezuela situation that we were talking about there in the first half. But it does apply across basically U.S. dominance in the Western Hemisphere and wanting to keep any Eastern Hemisphere outside of that. Today, that probably applies most proportionally to China's influence, particularly with their Belt and Roads Initiative, as we were talking there early. And I think underlying that's really formulating a lot of our policy most prevalently at the moment with Venezuela, but also across a lot of Latin America and South America as well. We go back to the 1960s and 70s. Cuba was probably the standout country where we had issues where Monroe Doctrine very much played a part in establishing our foreign policy. And as a result, that definitely has a big impact on trade.
When it comes to agricultural trade with grains in particular, it's the United States, Brazil, Argentina to a degree, Paraguay, and when you look for places in the world that have exportable surplus of corn and soybeans, it's mainly we folks here in the Western Hemisphere, and a few others in some other places. So, Guy, you'd mentioned in the very first part about how for soybeans we've been declining for several years in terms of the amount of soybeans that we ship, and the main export competitor in the world with the United States is Brazil. And again, China is very, very involved in their port system, their transportation system, et cetera. So it's a quote big deal, and it's kind of forced us here in the U.S. to look. It's not that we're abandoning export markets, but we're investing all that much more in domestic bioenergy markets, livestock feeding, you name it.
Now, you mentioned the energy markets there. When it comes to Venezuela, they're sitting on oil resources larger than that of Saudi Arabia. One of the largest energy providers potentially in the world sits right there in the Caribbean. And I think that's one of the primary drivers, both of China's interest in there as well as the Soviet Union. Moving on, I think we need to mention on trade is we've got a pending U.S. Supreme Court ruling we're looking for probably in January or February on tariffs and Trump's implementation of tariffs. There's a bit of a long history there. It'll be interesting to see how the Supreme Court comes down and rules on that. They could leave it, do nothing. They could restrict it significantly, or they could narrow in the scope of that authority, the presidential authority to apply those tariffs under the emergency provisions that are currently in law. So the result of that court decision is going to have a fairly big impact on the budget and on trade.
What justifies trade moves like this is probably a key question. Are the trade actions that the United States have taken justified relative to past law, or are they justified have we expanded that definition, or are we relying on old definitions to justify this, et cetera? Plus, a large amount of money's come in. How will it be used is all at risk. I wouldn't say at risk, but at issue right now with regard to that.
The other group we want to sort of touch base on is the EU and our European neighbors there. Expect to see some tension there escalate through 2026. A bit of disagreement on Section 232 investigations, and particularly when it comes to the digital and environmental regulations there. It's, I guess, becoming a bit increasingly unclear, and it's having an impact on European trade. Also, there's fairly significant influence fallout from the approach that we're having to the Russia-Ukraine conflict, as there's some diversity in views on how to sort of reconcile that issue.
Daniel, Guy, I appreciate you both taking the time to join us today.
Thank you, Shelby.
That was the senior economist at the IGP Institute, Guy Allen, and K-State grain economist, Daniel O'Brien. We're cutting to a short break now, but we'll be right back. You're tuned in to Agriculture Today, and we conclude our Friday show with K-State meteorologist Chip Redmond. Chip, thanks for joining us today.
Yeah, thanks for having me.
Chip, as we start the new year, wanting to talk about how you like tracking and figuring out what the weather might be, and for other people, what's the most important thing, in your opinion, for tracking weather?
Yeah, tracking weather. There's a lot of technologies out there that have emerged with our, we have more technology in front of us now. And so we just have more capability weather-wise. And things have changed in the history. Most people have gotten their weather from people on TV or on the radio, which are actual human people giving a forecast that they've thought about and deliberated over and providing something of value that's easy to understand. We've transitioned quite a bit with recent history with technology. Now you've got all that information at your fingertips, and honestly, you have more information than you ever probably wanted to know. With weather and anything else around it, there's other problems like social media that provide weather information that might not necessarily be from a reliable source. So being able to tailor and understand good places of getting weather information has definitely got more complicated and more fuzzy as we move forward with technology and trying to understand these emerging things that some of them are good, some of them are bad. So let's just dive in and talk about a few of them that probably aren't the best. I'm going to just focus first on our phones. Almost everyone's got a smartphone that's got capability of applications built into it. And these applications are great. They provide a really quick information at your fingertips that you almost get without even asking, right? Just look at your phone, and sometimes people have a top banner on their phone that'll say it's going to be cooler tomorrow, or it's going to be this temperature, or these warnings in place. And there's great information, but maybe not the best first place to go for weather data, because these native apps, I call them native because they typically come on the phone, those are very, very limited. They tell you what they think you want to know. They won't tell you the whole story. There's a great example from someone I'm familiar with on social media down in Texas, and they had an Apple weather tell them that there was light rain approaching their area, and the app didn't tell them, which they really needed to know, was that light rain was associated with a supercell thunderstorm that was dropping hail, softball-sized hail. And so these apps only tell you the information they think you want to know. And it's really important to keep an open mind when you look at that information and probably not rely on it as your main source. So just be mindful that these apps are very limited, but they initially only tell you one data source. They only focus typically on one weather model, and the accuracy quickly degrades when you go out more than 24 or 48 hours. And you can see significant flip-flops in the weather because that one model doesn't get a good all-in-one comparison. A couple apps that I'm interested in, and one is not so much an app, but a website. It's called weather.us. You can go in there, you can look at a 15-day forecast, and you can look at all the models out the next 15 days. And you can see how they potentially have a wide spread, and maybe there's uncertainty around that day. Another one is Windy. Windy's a cool one because you can actually visualize it across the map, and you can compare these forecast models to one another. Again, not focusing on just one app or one weather model necessarily. Probably the most important thing, though, is to remember there are still meteorologists making forecasts out there, and that they are 9 times out of 10 much better than any app you get. So if you have a news station app that you're interested in, or a meteorologist you're interested in who has an app, those are great sources. I highly encourage everyone have weather.gov. Weather.gov is the National Weather Service. It's still human integrating that forecast and providing real-time updates almost to that forecast that can go out the next 7 to 10 days. And lastly, an app that I really like, because the Weather Service does not have a native app. They just don't make one. But a Weather Service meteorologist made a great free app that's called Everything WX, or Everything Weather. And it's on both Android and Apple. All that does is takes the National Weather Service forecast and repackages it into something that's easy to visualize, easy to use in an app form. Again, that's Everything WX, or Everything Weather.
Chip, I appreciate you taking the time to join us.
Yep, thanks for having me.
That was K-State meteorologist Chip Redmond. That's all we have for you this week on Agriculture Today, but we'll be back with more for you on Monday.